Good morning, everyone, and welcome to the European crossover webinar. And obviously, the last night was quite the bit of volatility. And let me go on and move in the. Bear with me. There we go. So we saw quite a bit of the movement last night with, I'm sure most know, initially for those that weren't, we actually saw reports of that there had been some explosions. And initially the market did go on and start to sell off, but then about 20 minutes later, it came back saying that a lot of those reports are unsubstantiated or unsubstantiated, and the market came back. And then we saw a lot of comments about fake news, and then about a little bit later on after that, we saw reports come back in again. The market started to go and sell off. And obviously, the old saying goes, the rest is history. But we did go and see quite the sell-off, not only in the S&Ps. You can see right here that we also saw a pretty good sell-off, and then we saw a pretty good rebound on here. And we'll go on and try and detail in this a bit. So one moment. So we saw the market going in and sell off, kind of come back a bit, and then all of a sudden we saw the big sell off. Obviously, the reason we came back, Trump was going to go and give his speech, and then the idea was, or not the idea, but there was word coming out that Iran said that if the U.S. leaves it at that, they won't go on and take any further action, and so that allowed the market to come off of these lows here. We were already starting to come off a little bit, but that I think we were around 31.90. That popped us up to about 32 even, and then we continued to move a little bit higher. And then I think that's when Trump, much later on, came out and said everything's okay. And then the market rebounded. We went and paired back a bit. We saw some pretty good excitement, so to speak, with the dollar yen. After that came off, and we had actually come back, and we were sitting relatively quiet, I think around just a little bit above 8, and I think we made it up to about 8.15, and then Trump said everything's okay. Then we rally up to about 8.40. Then we come off, I think we came off to about 8, to look on here, I think it's just below 8.20. Probably have to do a 30-minute on this to go and show that. Yeah, right here. So we came off to 8.16, and then from there we've been working a little bit higher. So let me just get a quick glass of water. With that being said, we'll just go on and that was a quick recap of where things went. Obviously, also, we saw quite the move in gold. Gold actually got above 16 initially when it did go on and rally. We made it right to 16 even, and right here on the 30-minute. Let me see here. We made it right to 1600, and then we kind of sat back a little bit, and then we launched up to 1613. We started to pull back after things started to quiet down a bit. So with that, we'll go on and see where we stand as far as economic activity coming out. So at the top of the, let's see, right here. We did get German industrial orders, which came in actually a bit weaker here, and you can see where the euro is under pressure. Um, and we're going to get to that. We're going to go and do all the analysis. Obviously, I was up till very, very late last night. Played the yen on the downside. I actually did cover a little bit too quickly, but actually picked it up a little bit here, and then actually rode the everything's okay. No, wasn't the everything's okay one. It was the other one where Iran says they're willing to hold back, and I think the market rallied up about, I think about 30 ticks, 30 pips. But anyway, so been a long, very, very long night. But anyway, so we had French consumer confidence come in. Same thing, a bit weaker. Reuters poll for 104. They got 102. And then obviously UK Halifax prices. We have to see where everything's going. And then we have Eurozone business climate and economic sentiment coming at the top of the hour. And sorry about that. Got a pretty parched throat. Let me go on and we'll quickly jump into the news and then we'll get into the analysis. So it says currencies whipsawed on Wednesday with the safe haven Japanese yen and Swiss franc initially jumping after Iran fired rockets at U.S. forces in Iraq before they reiterated on the perception that the strikes would not lead to a wider regional conflict. Iran said it fired 15 missiles at U.S. targets in Iraq as early on Wednesday in retaliation for last week's U.S. drone strike that killed Iranian commander Qasem Soleimani, stoking fears of a new war in the Middle East. The Japanese yen initially jumped to 3-month highs against the dollar before retreating with the absence of immediate reports of casualties, steadying nerves. Twitter posts from both sides playing down the prospect of further escalation also helped calm currency markets. President Trump tweeted that a damage assessment was so far so good, and all is well, promising a further statement on Wednesday. Iranian Foreign Minister Mohammad Javad Zarif tweeted that the attack was proportionate and we do not seek escalation of war. Iraq's military said there was no casualties among its forces. News that Iran had launched ballistic missiles at 2 bases that housed U.S. troops in Iraq sparked immediate sell-off and risk, said Adam Cole, chief currency strategist at Capital Markets. However, a growing sense was there will be a full extent of Iranian retaliation has seen both moves fully reversed, and G10 currencies are back to close to where they closed yesterday. The yen, regarded as a safe haven in times of turmoil by virtue of Japanese status as the world's biggest creditor, was virtually unchanged by the day at 108.41. That stabilization followed a spike of as much as 0.8 to a 3-month high of 765. The Swiss franc similarly gave back gains, as so did gold. Switzerland's currency was also steady at 97.07 francs per dollar, having briefly jumped around 0.4 to 1-week high. The franc was also steady against the euro. If the market was really that worried that the end of the world was nigh, dollar yen would have collapsed, and that's clearly not been the case, as Stuart Oakley, global head of flow of XX Nomura in Singapore. And on with gold. Gold races to a 7-year peak after Iran's strike on U.S. forces. Gold surged more than 2% on Wednesday to break the 1,600 level for the first time in nearly 7 years, as investors flocked to the safe havens after Iran launched retaliatory missile strikes against U.S. forces in Iraq. Prices later edged off their highs after tweets by President Trump and Iran's foreign ministers eased concerns over an immediate further escalation of the conflict, but remained well supported. Iranian state television said that at least 80 American terrorists were killed, which is true, in attacks involving 15 missile launches. Missiles Tehran launched on U.S. targets. The move by Iran came hours after the funeral of Tehran's top military commander, Qasem Soleimani, who was killed in a U.S. drone strike late last week, intensified fears of a war in the Middle East. Fears of uncertainty and further escalation in this military confrontation are dragging up gold prices, said Margaret Yan at market analyst at CMC. This situation is definitely fueling demand for safe havens, not just gold, but also yen, while equities are being rather heavily sold off. Yes, but they did go on and come back. So even that part is proportionate. However, bullion gave up some of the gains after President Trump said a tweet on Tuesday that all is well. Concerns should recede to an extent that the broader consensus prevails that the conflict should resolve going forward, said Hitesh John, Vice President of Mumbai Securities. Gold is considered to be a safe haven, blah, blah, blah. So we're going to get into the analysis. Okay, let's go move into the euro. And the euro is under quite some pressure now. It bounced, and let me go on and get into that. Actually, I was working on the Asian analysis when all heck broke loose and trying to observe it and trade it and post things into the chat, because I was posting things in the chat, although there wasn't no one even there, but I was trying to post all the news that I could. Left me with no time. But anyway, let's go and move on. So looking at yesterday's action, at least initially, I mean, the prior day, we had already reclaimed back the 1170. Yesterday, we came off, or we were selling off, and once again, we closed below 1170. I was actually working on this right when all heck started to break loose. And so my thoughts were going to be, okay, well, it did sell off. One of the good things was that it held above 1130, but if we were to go back down, that's really going to open the door potentially for us to move lower. And essentially, that's where we're at now. Obviously, if you see here, and this 1170 is key, you can see, let me move this out of the way. When the market started to come back, okay, and once again, we opened, we're a little bit weaker, and we started to move up a little bit higher. We never got past this 1170. You see that? And now we've started to press even lower at this point. So really the door opens now to what we said at the beginning of the week is that potentially we could even make it down to 1105. And let's see right here. Right here, 1105. And the reason there is because anybody that did buy and would have put those stops. One of the things I was looking at yesterday, I said, wow, initially in the chat room, I was like, boy, that's something. They didn't get down to 1130. That looked rather positive that they came back up. And but now look, here we are pressing back. Now, this is key here, but potentially we can go and hit those stops. It's a matter of whether we don't. But that being said, we're back down here. So we're going to go with the support being potentially down to 1105. There's some at 1113, but potentially down to 1105. If we hit those stops, and on the upside, would be right there. Resistance coming in right there at 1174 at this point. Now it's key for them to hold this 1170. I'm actually going to move this to range now at this point. Can't really say it's bullish. We've already lost 1170. I mean, we lost it, we regained it, and then we lost it back again. And at this point, I'm not going to say that the market is bullish. We can say we're trading in a bit of a range here. We'll see where this market can hold it. But like I said, if we click these stops, it's going to potentially get us all the way down to 1105. Let's go move into cable. Let me see. Rick was saying something about this. One moment. Hang on. Rick's mentioned. And Rick has mentioned about some screens not updating, so bear with me. Four charts with bubbles floating. Oh. I apologize. Hang on. I think I've got you on the wrong screen then. Hang on. Then that should be it. Oh, okay. So I apologize. Okay. That you sent the screens with the bubbles floating. Okay. So it was on the wrong screen. So I apologize. I thought we were on this main screen. So let's go back real quickly to the euro. Olivier, hang on one moment. Sorry, guys. Hang on. Oh, my goodness. Sorry about that. But anyway, let's go back to talking about the euro. And so I had it on what they call bookmap. So that was the screen it was on. So apologies there. Anyway, I want to get back here with the euro to discuss that, and we'll show where we're at. So one of the things I was looking at here with the euro is we had lost the 1170, remember? And then we regained it, and then we lost it again. Here we are pressing here, right here at these lows. What I was talking about, the 1105, is potentially that we could come down here. Oh, yeah, right here, potentially right down here at 1105. Now, it's going to be key because, like I said, some people were buying the euro in Asia, and now if we press beyond here, those stops are going to be, I would think, most of the stops are going to be right there. If we go in and break here, it really opens the door potentially for us to go and get down there to 1105. Okay, we do have some support here at 1113, right down here at 1105. So I wanted to go in and clear that up. One moment. I'm still laughing about what Olivier said to Rick. But anyway, let me go on and get now into the cable. So cable's still holding up relatively well. The previous day, we actually had resistance at 31.95, and we actually, I won't say we blew past that, but we definitely got past that and made all the way up here to 31.29. But that's been actually an old resistance from before, or I mean 32.29 up in here. But we did go in and pair off eventually, and here we are back in here, which was at 31.95 yesterday when we got just above that up to, what was it, I guess 32.15. And then right now we're trading really in a very, very quiet range here with the cable. So resistance is still going to remain here at 31.95. And support on the downside, which we had yesterday from 31.16. We'll have to move that a little bit lower. But we're trading relatively tight here. It's going to be 30.80 here on the cable. Let's now go and move into the Aussie dollar. So we did go in and see the Aussie pair back, and we actually eventually made it down here, which was a support level that we're looking to get to this week. We actually had the 69.14 looking for this. I think initially we started out with 69.10 here, and then we said, hey, look, it eventually breaks down. We could have possibly make it all the way down to 68.48. Well, we've made it down here. Obviously, the concerns are the risk, and we came off those lows, but we're not off of that well, I should say. But look, you can see here, this is confluencing here with this trend line and right here, and there's your support. It's holding there, but that's going to be it right there, 68.48. Here's the deal. We're still above the trend line, but we're really at some kind of a crossroads right here. It needs to go and defend this area, and that's going to stand here. And it did hold, but Aussie really definitely needs to go and make a stand here. We're giving it the benefit of the doubt because it did break above the trend line. We're back to testing, basically back testing all the way back on this trend line and coming here at this critical area here. So it definitely needs to hold here. Resistance, if we do get this pop up, is going to be back up here at 69.14. And with that, we'll go and move into the Kiwi. Well, Kiwi's still holding up like a champ. Unlike the Aussie, it's really come under pressure. One of the things with the Aussie, and I do want to go back to that, something I've been thinking about for the last about week and a half or so, which was one of the reasons it's also going to remain weaker. They've had issues with, I would say consumer spending, I should say, not necessarily just retail sales, but consumer spending. But that being said, with those Australian fires, the concern is, and we've actually seen a ramp up in the increase for a potential cut by the RBA this next month. So that's one of the things that has really applied some pressure here with the Aussie. And when you look at the Aussie and then you look at the Kiwi, and here's the Kiwi still holding up like a champ. So we did go on and come down here into this area of, let's see what we had for our support from the prior day, which was 66.34. And you can see here we made it down to 66.18. And let's move this out of the way. $66.17. But look, we've already popped back up. This is, it's holding up like a champ. Obviously, with the run that we've had, you'd expect folks to come in and try and step in and try and regain long. So I'm not saying we expect the pullback would be necessarily be much deeper. But like I said, it has held up phenomenally well considering how far it's come back up. Support is actually going to be right here. I'm going to go with if we saw further pair back, 6608. And on the upside, just tagged there, it's going to be right here at 6691. Come on. Let's go on into the dollar CAD. Well, you know what? And we did see the dollar CAD rebound yesterday. But that being said, and actually you can see here, we made it right here up to the 30.29. Despite the moves that we've seen in crude oil and gold, I'm surprised that we did not forget a move down to 29.02, which was our intermediate target. But I'm surprised we didn't at least take out the lows. I mean, the most recent lows. So quite the surprise here. If we do go on push, and it looks like certainly potentially we could see a little bit further short covering in light of that. So resistance right now is going to be right there at 30.55. If we see some further short covering. And on the downside, $29.63. And let's go with the dollar peso. We saw a good rebound in the dollar peso overnight with all the mayhem. But obviously they sold, into that. See right here, we got just above 19 even. And resistance would be that 1902 area here. Still remains bearish. And support on the downside will go back to the 1882. Now, obviously, the real big mover was this dollar yen. This was quite the run. I actually got short when I told y'all the news was breaking, and kind of rather bothered because I covered way too early in the 815 area. And boy, did we just keep on selling. And we dropped down to, I think, around 1805. I think we rallied up to, 805. We rallied up to 813, I think it was. And then we rolled back down to 795 and then 785 and then so forth and pushed it. I thought potentially we could have made it down here. I had some support here at 757. I thought we were going to make it there. But I did go and catch some of it on the way back and played a little bit as we actually rebound, like I said, I was up late in Asia. I think I got short at 844, I think it was, and rode that for a little bit, but not a whole lot. But you can see this has really been just up and down like a yo-yo. When we take a look at this, the moves that we saw in this thing, it was something else. You can see here. even back and forth. Look at that. So where do we stand now? Well, we had before the resistance at 857, and we're going to stick with that. Although we do have a hammer bottom for right now. But we'll stay with the 857 for right now. On the downside, well, obviously we've blown through all these numbers. And here's that 815 I was referencing that I used actually as a level to cover yesterday as we were coming back down. We're going to go with that 815 for now. We'll go for the 815. Remember, on the way back down, we'll go back down here. Remember, as I mentioned to you, that we got that rally back up. We rallied all the way up to, what was it, 846. I was watching it. We came back down, and look what we came down to, 816. So it's going to be the 815. And I didn't even see the part. Everything had been quiet for a while, and I didn't even see the part. And then I saw, about Trump saying all is well, and that's where we took off again. And I don't even know what it was again. I think it was gold or something that I saw. And then when I looked on there, I was like, holy smokes, the yen's already all the way back up here. Actually, at the time, it was making it up to, I think it was 838, and it just kept pushing forward. And I was thinking, what if he makes it up to 850? And then finally we started to it was going back and forth, and I would say got lucky, but actually it sat there for quite a while. It didn't just go on and just immediately come back down. It sat there, and it didn't want to give it up. It just sat there and then gently it just started basically trading right at 840. But anyway, enough of that. Getting back here. So we're going to have, at least if we close here, we'd have a hammer bottom. But at least for right now today, we're going to go with 850, stay with that 857 as bias chart resistance. Let's go and move into the cash dollar index. This has pressed a little bit higher, and resistance is going to be right there, 97.15. And support, I'm just going to keep it relatively simple. It's going to be 96.77. And with that, we're going to move into the cross rates. All these yen pairs are going to be like that, I would think, for the most part, looking like hammer bottoms. You can see here we're back above the 72 cents even. Pare this back down a bit. And we've seen quite the move here. We actually came right there to this would have been support. You see that we came right down there. 71.30. Looked like the market bottomed at 71.22. Looking at 71.80. Let's go and look at this on a 30-minute chart. We'll go 71.86 for support. And resistance will be there, 72.44. We'll move into the euro yen. Same thing, a bit of a hammer bottom here, and we'll look same thing on we'll look on a shorter term basis. For right now, it's going to be right there, 2061. Obviously, these yen pairs have been all over the place, but that's where we're going to have support. And resistance comes in right there, 2111. Well, the euro has continued to gain against the Aussie for basically it's more about the weakness in the Aussie we've seen versus necessarily the overall strength of the euro. Nonetheless, we did go and come up here and challenge and make it appear almost right to the 63-cent level before sliding back. And obviously, we've seen that weakness here with the euro now in itself. I'm referring to the euro versus the dollar. Resistance is going to be right here for right now today. And it's going to be there at 62.47. We had 62.50 before. We'll go and leave that 62.50, but we had 47. And then on the pullback, right there, 61.74. Let's go move into the Euro Kiwi. This is really showing a little bit more of what we're seeing here with the euro as far as the inability to move much higher and then quickly give up those gains. Actually, we filled this gap right here and we came off of that. You can see it looked to be a little bit of a gap, I guess not. And the pair really continues to remain under pressure. If we do break even further, let's go and take a look at this on a 2-hour chart. It's really a bit of a mess. would come in right there at 66.95. 66.95. And for resistance, it's going to be 67.89. And let's go move into the ASEAN. Did go in and break below this trend line, but just like with the other yen pairs, forming a bit of a hammer bottom. The key right here is at 74.73. We're going to give it just a little bit of a little bit of extra room, not much. We'll call it resistance will be there, actually right there, 74.84. And support at 74.23. The move in the guppy right now, the resistance is going to come in right there. It didn't have as big of a move that you would have thought as compared to some of the other yen pairs. So it's going to be right there at 43.10 with the guppy. And let's take a look on intraday chart for support. And we're trading rather quietly with sterling overall. We're going to go and put the support there, right there at 42.17. Resistance is going to be that 61%, 91.87. And you see this coming all the way across here. That's going to be support, which is going to be just a bit lower, 90.55, 90.55. Make sure I already had 57. We'll just put the 5 there. Well, it looks like the euro has managed to come off of these lows here. We actually dipped below the, made down to 11.25 again and tagged it and popped back up. And gold, as I mentioned here, just holding steady after quite the night. But you can see right here, right across this 1585, 1580-ish area here. SPOOs have also gone and come back. Actually, even pushed even further than the rebound high, which is right at 32.30. We've even pressed up. We're at 32.31 right now, but we've made another run back up here to 32.35, kind of holding steady here. And crude has come back down a bit. Currently now at 62.92 after quite the run. But will be key for this euro to hold that 11.25. It was just was suspect to hit those stops, but it didn't. But if we do, potentially we could come down here to 11.05. Potentially, there's a little bit of support at 11.13. With that, that'll go on and call it a wrap up here on the crossover webinar, and we'll see you in the chat room. Thanks for joining us here on the European crossover webinar.